presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Making it, well, it's a TGIT, folks, okay? But it's a long weekend out here. I hope everyone has a great one, safe one. Great Passover, great Easter, and you know what? Enjoy the day, enjoy the weekend, folks. Don't make assumptions. Ask for what you want. This is a cool card, man. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. But you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 17, Nasdaq off 248, S&P's off 41, gold contract trading down $10 at $19.74 an ounce. We have silver down 31 cents at $25.71 an ounce. Light sweet crude up 243, 106.64 a barrel. Notes and bonds. The 10-year note down a full point at 119.25. The 30-year off a full 2 points, plus 8 ticks at 140.30. And King Dollar. King Dollar is up 426 ticks, trading at 100.301. Euro at 108. Yen at 125.99. The British pound at 130 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a market that wants lower price. Get some nice volatility in the market. We take a look at the SPY. What you're going to have out here is this. The SPY, bottom line, try to get a higher price once again. It's going to be another failure. You get 57 million shares right now. We got up to a price point of 444. You're at 439 right now. If we go take a look at the futures, we bring this future up. And as I was talking about in the update, you had bottom line a trader come in, give it some heavy volume, and that's not going to be the end of this volume, folks, because what happens is that when they're coming in at 3 o'clock in the afternoon, and you got an hour left in the marketplace, and you already have a failure in price, they're going to jam this thing, man. My take is that the lows of yesterday, a game right now. That low of yesterday we're talking about, right now you're at 43.98 and we're talking about 43.84. So you're talking another 14 points lower, which would get you, down 60. And, you know, the volume's accelerating. You can kind of see this. If you're watching Tiger TV, you can see the last 10-minute bar. Watch this. You know, bottom line, started, and, this is a cool, okay, so check this out. This is really cool to understand price and volume, folks. Okay, so here, watch this. This is, okay. You can see that when we try to get higher at 2 o'clock this afternoon, right? See that you had a spike in volume. That spike was 23,000 contracts, right? But look what you were going into. You were going into 67,000 contracts. So when you're looking at the market, folks, right, you have to understand that the market is accumulation of all of us, right? As one entity, buying and selling. Well, when you look at this, and this is very subtle, meaning that I can there's no doubt I can understand when people say, "Hey, you had an expansion of volume." We did, but as always, what are you going into? And you can see when we were going into, the bottom line is that you had 23,000 going into 67. Well, guess what? That's not enough. Now let's do the other side of it. Then all of a sudden, it lets loose. What do? You let loose with 24,000 versus 15. So you go on a lower low, accelerating. We just accelerate again to 24,700. Bottom line, you get the gist of it. That's a market that wants lower price. And if we go take a look, that is the S&Ps. We go over to the NDX 100, the Nasdaq Qs. What do we have inside the Nasdaq Qs? What we have is this, okay, NQs. Okay, so we take a look at the NQs. We're down 282. You're going to see that we had the same type of expansion. Look at this. The NQs are already at this low, I think. The low of yesterday was 944. There we go, man. So now this is what the next move is, right? So now when you kind of look at this, and this is a tricky one, because the reason it's a tricky one is like, okay, we went sideways intraday. So what I'm explaining about being tricky, folks, is this, is this a much larger ABC structure down? Because you can remember, it's a straight line move down. So it's like, okay, I'm not going to go with the ABC here. The reason being is that because we did go sideways for such a long period of time. Bottom line, you're into this area here, but what that's telling me also is this. So we already hit the, let's see, we went to 27, and the bottom tick yesterday was 21. So what that says is this. Now, this is where it's really dangerous coming into the close. We didn't hit the low. We missed it by 6 ticks. Well, when you miss it by 6 ticks, more than likely we're going to see a little sideways movement for, I'm talking about a very short time, minutes. And then you're going to see another jam. Because whoever is jamming this, meaning, larger banks, okay, they're going to see where that tick is. They're going to say, okay, we've already got it twice. We know we're on a holiday weekend. They're going to jam it again. That's the bottom line. And if they jam it again, you're going to be down at the lows that we're talking about on Tuesday. So gold contract out here. We take a look at gold. Gold has an inside day out here today. What was interesting is that this morning you had divergence. The divergence inside the gold market this morning was that you had the dollar down and gold was down. It's like, okay, that ain't going to fly. Bottom line, you had gold go down to 1962. You're at 1975. Now, what I want to show you in the gold market is this. If you're bullish, this is the type of move. Now, this is what's so cool about timing the trade, folks. You're pulling back, and you're pulling back with tremendous amount of volume, 133,000 contracts. That's what you want to do when you're pulling back inside of the market. You want a monster contraction of volume. And if I show you this, we put this up, you're going to see the contraction that we're talking about, because gold has been having a problem with volume. But the bottom line is that you can see that yesterday we did 132,000, but the prior day was just going into 170,000 and then 184,000. Stay right there, folks. Come right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 7 points. You get the Nasdaq down 238. S&Ps are off 37. Let's get over to the bond market. So let's show you something here. We have an ABC structure down to 117 in the 10-year. You're at 119.25 right now. You know, you get quite an acceleration down here today. There's no doubt about that. Then if we go to the TLT, folks, now the TLT is the 20-year bond plus. Okay, so what that means specifically is that they start out as 30-year bonds. They get 20 plus left. And look what you have here, man. It's a monster ABC down. You're talking about 114. You just broke the B point today. The B point here had, we're going to do it. Well, we still need 1 million shares, but I expect we're going to get it. You need 30 million shares. We've done 27.7 right now. You broke the B. Yeah, it's a clean ABC structure down. You take a look at this. Your A to B setup. It's a 10-point A to B. Your C is the highs of yesterday, and that gets you a 114. Now let's bring this back. I want to see what 114 is to see whether we got any juice there. Oh, what's that low? That's interesting. So the low's 111. So the last swing is 111. That's where it's probably going. That's how that shakes out. And you can see, look at the volume, man. The volume is just explosive in a monster way. Now, let's talk about this for a second because this is so intriguing how this works for banks, folks, okay? So yesterday, bottom line is that you had J.P. Morgan come out with numbers. J.P. Morgan is also an ABC structure on the way down. Broke a B point, did it with volume. You know, really quite a breakdown, actually. This morning, what happened is that you had Goldman come out with numbers. Morgan Stanley come out with numbers. Both of those numbers, if you look inside those numbers, what you had is that the bond market gave them a lot of juice, okay? That's the plus out of it. That's also the minus out of it, because let me show you how this works out, balance sheet-wise. So Goldman come out with numbers, hit a high today of 333, and has given up 12 points since then, okay? You go to Morgan Stanley, we take a look at Morgan Stanley, and Morgan Stanley, same type of setup. Morgan Stanley, you know, got to 87.90, and right, not as bad, you're at 84.76. Same type of setup, though, has given it up on price. Now, so check this out. This is really cool, man. So you have the aspect that we have rates going higher, and the spreads basically are not enough for the banks to make money. We've been talking about the aspect, okay, why are the banks going south when the spread should get bigger and the bottom line is the banks should make more money, okay? So they did make more money in the context of the bond market as the bond market was going down. That's the plus for banks, right? Here's the minus, folks, and it's a monster. So in 2007, 2008, when all the banks went bankrupt and all us citizens bailed them out, you know, the bottom line is that they had new rules they had to go by. And the rules have to do with their balance sheet as to how much they can lend. So listen, this is wild, man. So when banks are lending, you know, you talk about the repo markets, you know, meaning that every night the banks can turn around, go to the repo market, get cash out from the Fed. That's all about the collateral they're putting up as banks, as bonds. They have, you know, banks hold bonds, and they hold bonds in a big way. So now listen how this shook out. Because bonds have gone down so dramatically, so fast, the rule now, and this wasn't the rule prior to 2006, the rule now is that they have to mark them to market every quarter, the bonds that they have, regardless of if they're going to keep them to the end of the term. So prior to 2006, they didn't have to do that. And the bond has to do with how much money they can lend. So I suspect what a lot of these players really got to understand once they looked at these numbers was that their ratio, because the loss was so dramatic in their bond portfolio, their ratio of the amount of money that they can lend has contracted dramatically. Now, the way this works is that every quarter they have to do mark to market. So most of the time, the banks, you're going to hear the banks moaning and groaning and going crazy, okay? Because most of the time what happens is that these banks do buy bonds and they keep them the whole term. So at the end of the term, yes, it'll work out for them that they can lend more money. But guess what? If the bonds keep going down and the yield keeps going up, which is going to happen, that also contracts the amount of money they can lend because of the new, and it should be in place, by the way, okay? Because the bottom line is that we saw what happened last time when they were valuing bonds at 100 cents on the dollar and they weren't 100 cents. And I'm talking about treasuries also. It's all of the above. So that's why banks, folks, what's one of the reasons that banks are going south when, in fact, they came in with big numbers. Because everything's predicated when you're in the lending business is how much you can lend, right? That's the bottom line. And what's going to happen in the banking business, like, right, it's already happening, is that they are going to be able to lend, they are only going to be able to lend less money. And that is a monster deal. And that's not going to go down. So that's another contraction in the marketplace going forward. You have the Fed tightening up, you have rates going up, and now what's going on is that you have the aspect that the banks themselves, even if they wanted to lend, guess what? They're going to be tapped out. And I suspect, you know, most of the time you're going to go up to the limit that you can, and guess what? The limit's lower now. So the reason I'm bringing this up so much is that it makes a difference, and you've heard me say this a million times, in economies in general, our economy in particular, it depends on how much you can sign for and how much the bank will give you, accelerating the GDP forward. That's the bottom line. So all of these are contracting. We take a look at Twitter, TW. You got Elon Musk. I suspect, you know, Musk basically has been, you know, we've talked about it before, the aspect of how much money has been lost with his yapping away. Today, I expect the same thing. You know, whoever his followers are, guess what? Bottom line, the stock was a high of 48.50. It's at 44.93 right now. You know, couldn't even breach the swing point on a takeout. You know, I don't think that's going anywhere. And if it's not going anywhere, you know, the threat, of course, was the aspect of if you, this is a final offer, and if you don't take my offer, bottom line, I'll sell it to shares. Do you know how many other basically tech companies would be out there. If he was dumping shares simultaneously and they would just scoop them up, yeah. I think each time that he does this, he'll get less qualifications, meaning followers. I can totally understand why he wants to buy it. I mean, how cool. Think about this. You're the richest man in the world. Whatever you want to push, you have Twitter to push it out. He shouldn't even get any other investors. I mean, he should just, if that's what I suspect in one way that I can understand that, man. I mean, it's like, if I can break, he'd be tweeting out, man. Yeah, anyway, you get the gist of it. Stay right there, folks. Come right back. Dow's down 9, Nasdaq's off 248, S&P's off 40. We'll come right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 27. You get the Nasdaq off 255. S&Ps are off 41.5. Let's get over to the NDX 100 and take a look at the strength versus the weakness inside there. You got this is the second day. Marriott's caught another bid. Marriott's up 2.5%. CGen is up 1.6. Delta up 1. Taken away from it. This is a heavy number here. Pinduoduo down 8.5%. Mercado Libre down 5.5%. And you get Lucid down 4.9%. We take a look at some of the higher volume equities out here. Well, actually, let me look at these indices right now first, okay? Let's see. So what we had yesterday, when I was talking about the indice volume, it did come in short. You can see 837 yesterday. You're at 515 right now today. That's going to come in short also. And the composite also did come in short. We did 4.8 versus 4.9. You're at 3.6 right now. And so that more than likely, they ain't going to do 1 billion shares in 45 minutes. Same thing, though. You're up at the highs, and you're going to be closing at the lows, and you don't have any action in it. Some of the higher volume equities in here, and this will be a low volume market. Kicking into the right there. Let's do this one. I want the S&P instead. Okay. So taking a look at these, you got Twitter is down 79 cents. Bank of America is off $1. Apple's down 460. Nvidia 780. Nvidia's a trip, man. Microsoft down 711. Tesla down 31. You got J.P. Morgan off $1. There's nothing really heavy out there. Let's go over and take a look at the NVIDIA, NVDA. So you take a look at this chip stocks out here. Yeah. Oh, look at this. This will be interesting. So this is going after its lows. And the real question is going to be, see, what happens is that this is really cool the way this is set up, meaning just to understand, bottom line what building costs is all about. And you can see in the case of NVIDIA, NVIDIA has been building cause to blow away this bottom of 208. First time we were down on a weekly, had 345. Next time was 246. Next time was 229. And guess what, folks? Look at this. Okay, so picture this. We're already at 221, and it's going to be a 4-day week. That's telling me that, number one, we come back to work, it's going to blow this thing away and probably jump the creek. It'll probably open under 208. And if that's what you get, guess what? Next stop, folks, is 162. I know that sounds like a huge amount, but for NVIDIA, it's not. That's the bottom line, is that on NVIDIA, that's how NVIDIA trades, man. Here, I'll bring this back a bit. I remember the first time it hit this high, then this thing went down. Is it that long ago? Yeah, we went. Man, time is really weird. Yeah, in 2018, you went from 73 down to 31 in 4 months. This is just how it likes to trade, man. It's so weird, man. Then that was the last big pullback. Okay, then in 2019, we went from 79. Well, there it is too. 79. It was 46 the next month, and then shook it off. That was the last time. So last time this thing came down at all was going all the way back to 2020, and this here, you got some heavy unloading inside of this equity. We go take a look at the king out here, Amazon. Amazon's going up 5% on their sellers. That's down $77. Now, with Amazon, see, this is cool. That tried to get to the high yesterday, can't do it. So you got a little tick higher over than yesterday. So you're going to have light volume going up. Bottom line, Amazon is also game for these lower prices. Microsoft's the trip. Microsoft, it actually blows my mind that Microsoft can move this much each day. If we go take a look at the last low was 270. That was established out here in the beginning of March. You go all the way up to 315, and guess what? We're already back to 280. And Microsoft has the same type of setup. Meaning the setup that we're talking about has those high volume lows. It's building cause. And in Microsoft's case, folks, this is what's going on in Microsoft's case. You break these lows, and it looks to me like Microsoft has a number on of 242. So that's pretty insane out of the 349 to 242 for a mature company that's taking in billions. But what does that say? What that says, folks, is that we have a repricing of the market. That's how you basically should be looking at that. A repricing of the market means that asset classes are repricing. And the reason they're repricing is that you have the contraction of capital inside the marketplace. And once you have the contraction of capital inside the marketplace, all of us have to basically tighten up a bit. And as we tighten up, guess what? That's what basically reprices everything. As we think about, like, okay, Are we going to do this? How much is it going to cost us? I don't want to pay that much. I'd rather sit around and see where this thing goes. Well, that's basically a repricing, you know. We got to take a look at, let's go Tesla and see where Tesla is. So Tesla's off a few dollars. Okay, so, yeah, Tesla's just an inside day. That's really not doing anything. My take on Tesla, though, is that has that high volume low that it's going to go after. And the real question is that, you know, can it stop at that level? Because we came down. Yeah, Tesla doesn't have any volume at the highs nor at the lows. But when you don't have any volume at the highs, that is saying flat out that bottom line is that you're going to have a hard time getting up to those prices because of the fact that you'll have higher price, you have less buyers at higher price, so that's like less sales. That's a market, an equity that wants to go south. We go take a look at the silver. Let's go take a look at silver out here. So SIK. So we're backing down 28 cents. You have 28,000 contracts, 49,000 contracts. Okay, not a bad setup. We got to a higher high. This is going to need more volume too. The silver. So when you're looking at either silver or gold, silver, what you like to see in silver, folks, is about 175,000 contracts, 150, 175. We get 49. You know, things really get going. That's the type of volume that you get. Well, I guess the high was 137, so about 125,000. Inside of the gold market, you want to be banging out 200,000 contracts. Not today, we're banging back on 133. That's not bad. But we've been going up at 150, 160, and we don't want to see that either. That's not enough contract volume in order to basically sustain higher price. You know, when gold gets going, it likes to bang out that 160, 170. Then you get a couple 200 days in between that. That's when you really get some momentum going inside of the gold market as that baby gets to higher price. And don't forget, folks, you get the long weekend coming up. If you want to check out the gold report, bottom line, come over to our website at TFNN. You're going to see it right under featured content. You can check it out, get it for a month. You like it, bottom line, it works for you. You continue to get it. It doesn't work for some reason, guess what? You can have your money back. Dow Industrials. Down 46, Nasdaq off 275, S&P's down 47. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials off 41, Nasdaq's off 272, S&Ps are off 45. There's a couple questions in the den, folks, asking about the aspect of what the heck happened at a 10-year. So the 10-year, 30-year, they have been in a downtrend. That being said, I suspect what happened out here is that you had John Williams come out from the Fed. He was on Bloomberg. I'm just reading an article right now. You know, that's the New York Fed chief. So the New York Fed chief, folks, runs everything. And the bottom line, he came out saying that, hey, guess what, man? I think that half point is on the table. And so right now, you can see we're at 2.8. It was at 2.5 before he was on TV. So the bottom line is that the Fed is, bottom line, telling us they're going to go with 50. The market, you know, we all have different ideas on this as to, you know, where this is going. Like BlackRock came out this morning. So earlier this morning, BlackRock came out telling all the other broker-dealers and banks that they're dreaming that they don't think that the Fed funds rate, okay, which is still basically laying at 0.5% or something, a lot of the banks think it's going to go to 3. BlackRock comes out and thinks it's going to go to 2. There's that much differential, folks, okay, in the aspect of where folks think that the Fed is going to go. You know, yesterday I was reading an article about the aspect that this writer didn't feel that the Fed would have the guts to continue to rein in the economy because of about the number of jobs that were lost. You know, my take on this, man, is that they're not going to stop. And where I'm going with that is I'm going right back to 1994. And, you know, I didn't know as much as I know now in 1994. There's no doubt about that. But I remember this specifically, that the acceleration, I think the Fed went up 8 times in a row. What I did know is this, is that the amount of money that was lost in bonds was extraordinary. And at that particular point, in 94, the mantra always was that if you buy bonds, you don't lose money. Well, what ended up happening there, you know, if you hold bonds to fruition, meaning the treasuries and all that, yeah, you get paid. If you're in bond funds, you get absolutely smoked. Because what ends up happening, the bond funds are trading bonds, number one, and they have a lot more than treasuries in them. You know, so the amount of destruction was pretty bad. And when I look at the overall picture, you know, the bottom line is that what would you rather have, folks? Would you rather have the prices going up 8 or 9% per year on everything, or would you rather take some pain and that you come back down to the aspect of 2 to 3%? Well, you know, that doesn't seem like a hard choice to me. Well, and this is what the difference is. And I understand the writer, how they're saying that, because what will happen is that as the Fed, bottom line, keeps pushing on the economy, people are going to lose their jobs. You know, we keep hearing about the aspect of cars and how the car prices have gone up astronomically, which they have, and trucks. Well, guess what, folks? The numbers came out yesterday. year by year, truck sales went down 23%. 23%. Now, our GDP, 70% of the goods in the United States get moved by trucks. That says quite a bit. What does that say? That says that you and I, okay, let's say we're in the trucking business. That says that we either don't buy another truck because we're worried that something is happening, or we don't have enough business to buy another truck. That contraction's already happening. My take is that we're already in this contraction and you just don't see it yet, because what normally happens is this, is that we have that recession board, and the way the recession board works is this. The recession board works that they'll finally say, okay, we are in a recession. Any of us that have been around for a while, every time they say that we're in a recession, guess what, folks? It's about a year and a half later, and we're coming out of the recession. And so the definition of a recession is 2 quarters that you have negative growth. That's the definition of a recession. You get the gist of it. You know, there's going to be a lot of different things out here. I would say that folks that have seen cycles before, when you have that experience, it's different. And you got to remember something. Everyone on Wall Street right now, you don't have any people on Wall Street except, maybe a couple of the managing directors that were around the last time that they went up on rates. Look at my son Tommy. He's 40 years old, right? The bottom line is that we haven't gone up on rates. My God, when this happened, he was born in 1980. And so picture this. He's never seen rates go up. Because, here, watch this. You got to see this, man. This is really cool. Okay, so let me do this. US 1. I haven't done this yet. This is going to be awesome. I am going to bring US 1. I'm going to bring this 30-year bond back 50 years so you can see he's 40 and he was born right as rates were peaking, because I remember the first house we bought, the second house, okay? First house I paid 14%. I think the second house I paid 12% or something. It was still outrageous, but yeah, I'm going to bring this back 50 years. And where do you see this line? And where do you see, it's going to be interesting. I want to see how it popped off the bottom now. So I'm bringing this back 50 years, and I'm putting this on a quarterly. Okay, look at this, folks. Here it is. This is where Tommy was born. Here it is, right there. Okay, so he was born he's born 1 year before the low. The low in bonds was established in 1981 at 55. Now, when you look at this chart, as this went up, this is interest rates going down since 1981, and the peak was March of 2020. And you can see how it's going down. The bottom line is that you had the peak that was laying out there at 200. We're at 140 right now. This thing's, bottom line, we'll see what it kind of support you get at 136. You break 136. My take is that we're going probably down to 135. Well, that's pretty easy. Yeah, 135 is game for sure. But you get the gist of it, So there's that many folks that haven't seen that. And what I've found is this. It's really, you can teach things and you can learn things out of a book, and that's great. It's huge. But that's not like seeing the cycle. Because what happens when you see the cycle, you have your money's in the middle of it. You're trying to buy a house. You're trying to get to work. You're trying to pay for your kids. You're trying to get eggs. When you're in the middle of it, there's a different mental calisthenic that takes place. So you really get to understand it more. And when I take the understanding, I look and say, okay, they're saying they can't go up on rates because the job thing there. If we lay out at 8% inflation for 2 or 3 years, you are going to have basically a social uprising, okay? It's just, that's huge money. Dow Industrials right now down 80, Nasdaq's off 282, S&P's off 51. Stay right there, folks. Come right back.
Sharpen Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's off 91, Nasdaq's off 290, S&Ps are off 51. Let's go over to the NQs and take a look at them, because we were talking about both the NQs and the E-minis when we were coming into this hour. And you can see that, so it blew away yesterday's lower price. We've got to 13,890, and on the day before, it was 881. So you're 9 points. Well, just give it a few more minutes, man. You're going to be down to these levels down at the close of Tuesday. That's how this is shaking out. We go into the S&P. We take a look at the S&P out here. That's down $50 right now. That's 391. The last 3 digits inside of this. Okay, so this hasn't got to the lows of yesterday yet. The lows of yesterday out here were 43.84. We've got to 43.89. You know, now check this out. See how so the volume's expanding right there, coming into it. So then I had a question about, what do you think about Monday? My take is Monday will go in lower. This is, when you take a look at closes too, folks, okay, this is important. This is accelerating down, and if you're a bull, this is the worst thing you want to see, is that you close at lows and you have volume at lows, and you don't hit the low. Because what happens is that that low wants to get hit. That's where all its friends are. You know, bottom line is all his bear friends. It's out there, the bears have all the salmon, and he's trying to get down there to get some food. Well, bottom line, they're going to get down there on Monday morning, because all the salmon is down at these lows. You know, last night, you know, I was watching on PBS, the Arctic, with all the different animals up the Arctic. If you haven't, it was that they do the nature deal. Great program, folks. Listen, folks, have a great weekend. Have a safe weekend. Happy Passover. Happy Easter. Come back and visit Tommy Monday morning. Kicks us off. Have a great one, folks.